Have you ever tried to calculate how much you need to save to maintain your current lifestyle in retirement? Experts recommend you aim to replace 75% of your income in retirement through Social Security and other sources like your 401k, 403b, IRA, or Roth IRA. For example, let's say you make $50,000 per year. According to experts, you should aim to have $37,500 available each year in retirement. Let's walk through two different scenarios to help you see how much you need to save and invest over time to maintain your lifestyle in retirement. In the first scenario, we'll assume you're going to fund your entire retirement through individual contributions to your retirement accounts, plus employer contributions. In the second scenario, we'll assume you'll fund your retirement through a combination of individual contributions to various retirement accounts, plus Social Security payments. For simplicity, we'll assume you'll enter retirement at age 63 and enjoy 18 years in retirement. These are just averages, so you'll want to play around with these numbers when you do your own calculations. For example, if your family history suggests you'll live well into your 90s, you'll want to simulate that. We also aren't going to include the effect of taxes or inflation in this example. When you do your own calculations, you may want to increase your target income goal to account for this. If you wanted to fund the entire $37,500 per year for 18 years with just your own contributions, you would need around $675,000 sitting in your retirement account at age 63. You can use an online investment calculator to quickly see whether you're on track to meet this goal. Let's pretend you're currently 35 years old. You plan to retire at 63. You've already saved $15,000 in your 401k. You're currently contributing $300 a month to it, and you're guessing you'll receive a 6% return on your investments over time. With these assumptions, you're projected to have around $340,000 at age 63. And $340,000 isn't enough to reach your target income goal. If your current savings plan falls short, play around with the calculator to see how much you need to contribute each month to reach your goal. In this example, you'd need to increase your contribution to around $700 per month to reach your goal. It might feel daunting to save such a big sum of money. However, keep in mind that you don't actually need to save $675,000 to end up with $675,000 in retirement. In this example, you would only need to save around $235,000 over the next 28 years in order to retire with over $680,000. And over 60% of the balance of your account would come from the growth of your investments over time, which is a huge boost. Invest early and often. A coach can help you find room in your budget to save and invest more for retirement now versus later. Next, try adding in the impact of estimated Social Security payments. Social Security payments can vary widely depending on the number of years worked, total earnings over time, and the age at which you claim benefits. The earliest you can claim benefits is age 62. However, the longer you wait to claim benefits, the more money you'll receive each month, so you may want to factor this into your retirement strategy. You can create an account at ssa.gov to monitor the earnings tied to your Social Security benefit and see estimated benefit amounts. The closer you get to retirement, the more accurate the estimates provided will be. Let's assume you'd receive Social Security payments of around $1,161 per month, or $13,932 per year, if you claim benefits at age 63. In this case, you can subtract $13,932 from your income goal of $37,500 because you don't need to worry about replacing it through your own contributions to your retirement account. You now only need to self-fund around $23,000 of your yearly income goal, which means you would only need around $430,000 sitting in your individual or employer retirement accounts at age 63 to meet your desired income goal. You can use the same online investment calculator to quickly see whether you're already on track to meet this new goal. It looks like you'd still need to increase your monthly contributions, but not by much. Play around with the calculator to find out exactly how much you'll need to contribute each month. In this case, you'd need to increase your contributions to $400 a month. In this scenario, you'll need to save less overall to reach your goal. However, we highly suggest saving more than you think you'll need so that you're prepared for whatever life throws your way and truly have the freedom to do what you want in retirement. At the very least, log into your retirement account and increase your contribution by 1% today. Remember, these examples relied on a lot of assumptions. Keep in mind there are a ton of different factors that will affect your individual retirement readiness. Be skeptical of common rules of thumb and do additional research to make sure you're preparing for retirement in a way that makes sense for you and your lifestyle. Review your retirement plans each year and update them as needed. You may find it useful to speak with a financial coach about your goals for retirement and receive unbiased feedback on your current plans. We're ready when you are to help you plan for retirement. If your employer is a current partner, there's no cost to you to access our programs. Please visit meethoneybee.com for more information.